Any questions if you have some? Thank you very much.
Good afternoon. I'm Stephen Amasu from Uganda, East, a small part of East Africa. I have been a short-term PFM expert with the IMF, mainly on physical reporting and PFM reforms in many parts of Africa, particularly in the South Africa, south of the Sahara. And I've been to many countries on the PFM and physical reporting, starting from my own country, Uganda, where we initiated the PFM reforms and accounting reforms as public accounting reforms. I've also been a PFM practitioner with a number of agencies, particularly the World Bank and DFID. Currently, I'm in South Sudan as a senior financial advisor to the Ministry of Defense. And you can imagine how difficult it is to manage defense expenditure and making it more transparent and accountable to the people of South Sudan. And I have also been undertaking a number of consultancies. In accounting for an open world, I'm going to share you my experiences, but the views expressed are personal views, are not of the end of the institutions I work for. And I think that's a necessary caveat. But in accounting in an open world, we tend to use the general purpose financial statements, like the financial statement prepared under IPSAPs, general purpose financial statements. And so it presumes a number of the internal users and the external users. In practice, and my experience indicate that internal users pay less attention to these accounts. There's only one incident when we had prepared for one country the first ever consolidated accounts sometime in 2004. Previously, all these years, they were preparing receipts and payment, which is on spreadsheet, not informative. Nobody has interest in them. So we prepared the consolidated using the IPSAPs. So in one meeting in the morning, we have the Secretary of Treasury summoned us, and we're waiting for some other people, and we're talking generally. And I made a funny remark that the government was paying interest on its own funds. And so that triggered off the Secretary of Treasury. What do you mean by the government paying interest? And he was seeing the huge amount of interest expense in the statement of financial performance. I said, yes, you see, what is happening, and what was then happening, was that there were a number of government projects. You know, every donor comes, open a special account. Every donor development partner comes, open a special account for every little project. They went contrary to the norms of good public financial management and opened these accounts with the commercial banks. So it came a time when all these commercial banks were washed with money, development project funds. And the government was borrowing by selling treasury bills. Because, you know, commercial banks won't make profit, and the most safest investment is to buy treasury bills. And because after some period of time, you get paid interest back, tax-free. And so what happened was that, so these commercial banks are washed with cash based on the development funds, which are channeled through them for the government, decided to buy the treasury bills. So I explained to the Secretary of Treasury and said, is that so? I said, well, you need to consult with the governor of the central bank and find out how much money is lying awash in those commercial banks, which should normally be in the central bank. And that led to a policy change. The government then took a decision to ask all government funds, these projects, so-called project funds, to be transferred to the central bank in order not to pay interest on the funds. But that is an incident, rare, where internal users use the general purpose financial statement for transparency and decision making. However, in the countries I've visited, now there's an increasing trend for the budget execution reports, which I will talk to you later. In Africa, politicians value these general purpose financial statements very much, and they use it. And because the African countries are adopting the FSAPs, it has helped a number of public accounts committees to exercise oversight on the executive. But still, the general purpose financial statements are very much limited, and I'll explain to you why they're limited. And it is not serving the intended purposes. The first problem with these IPSAPs or EPSAs or whatever public sector accounting standards are being adopted, most of them are inherently based on the private sector approach. The private sector says you need to prepare a statement of financial performance, or the income and expenditure account. But that is not very much relevant to the public sector, and I'll explain to you later. And the current steps to move towards integrated financial reporting is yet also to be embraced in many of these African countries, and people don't still understand it. The financial statements are often crafted in very highly technical terms. And sometimes when I meet these members of the public accounts committees, they ask, what is this statement of net changes in equity for a Ministry of Finance or a Ministry of Defense? It doesn't make sense to them. So what is it? But this is private sector where you know that, okay, I put my capital in, I have made a profit, so I have there's a change in my net worth. But that is not the interest of the public accounts. I mean, the general public don't see that. Or you call it the net assets. Or if you look at the statement of financial performance, you want to see how much revenue, how much expenditure, and what's the balance. But the users of those financial are not looking for that. They want to see what was budgeted and what was released by the government. Because maybe in Europe, where the budget is very much honored, but in many African countries, you find that what is the approved or appropriated budget may not necessarily happen at the end, because we still have the problem of budget credibility. Because in PFM, one of the 3 strategic goals of PFM, public financial management, is that you need aggregate fiscal discipline, that what is budgeted for is actually realized and is actually released. And when it's released to the ministries or government departments or agencies, it is actually spent and see what has happened. But more often than not, you find that there are many budget revisions during the fiscal year. You find the supplementary budgets, and so there are many changes. The government departments don't get what they were appropriated, and so the statement of financial performance doesn't make sense to them. What is more important for them is the statement of appropriation account. What was approved, what was the revised budget, what was released, and what has been expended, and what has been surrendered back to the consolidated fund. And the other problem is that in most countries, the accountability cycle is either 12 months or more. At the end of the fiscal year, say if it is 30th June, then you have 4 months for the ministries or departments or agencies, whatever, to prepare those accounts. Then you give another 4 months to the Auditor General. So we have 8 months after the end of the fiscal year. Now, those then are tabled before Parliament. Parliament then refers to the Public Accounts Committee. Then the discussions start. The start of it again start another 4 months after the presentation to them. So you have a whole 1 year before any accountability process would start. And so in some countries, you find that you have this backlog running up to 2 or 3 or 4 years. And before, even after that has been done, then it has to be tabled back to the parliament. Parliament has to make a resolution and give executive directives to the executive to implement those recommendations. Then the executive has to submit back what we call the Treasury memorandum to report on what they have taken. So the fiscal year ends 30th June 2013. The park starts probably around 30th June 2014. The Treasury memorandum might come sometime after 2015. And so then people lose trust. I mean, after more than 12 months, 18 months, 24 months after, thieves have gone, shop closed. So where's the public trust? So we, public sector, we have a challenge. Unlike in the private sector, your accounts are closed within 1 month after the financial year. The audit takes place simultaneously. Within the next 2 months,